December 29th, 2006. London. Inside the British Treasury, a routine payment is processed. No cameras. No ceremony, just another line item sent to Washington. The amount, $832 million. With that transfer, a file is close to a file that has been open for 60 years. That payment marked the final installment of a debt Britain first took on in 1946. Immediately after winning World War II, the war that saved Europe, the war Britain helped win at unimaginable cost. But what that clerk never saw was the full balance sheet. The original loan was $3.75 billion. By the time the last payment cleared, Britain had paid more than $7.5 billion. Double the amount borrowed, and that was only the visible debt. Long before Britain ever received a single dollar, it had already sold off the foundations of its empire. Gold reserves, overseas investments, strategic military bases. Its global trading system. When everything is added together, asset sales, lost income, surrendered markets, interest payments. The total wealth transferred from Britain to the United States between 1940 and 2006 reaches roughly $450 billion in today's money. To put that in perspective, the entire Marshall Plan, celebrated as America's generosity toward Europe, cost about $200 billion in today's dollars. America extracted more wealth from Britain alone than it gave to all of Europe combined. And Britain wasn't an enemy. Britain was the ally. Britain was on the winning side. This is the story of how the United States didn't conquer the British Empire with armies. It acquired it financially, how victory on the battlefield turned into bankruptcy on the balance sheet, and how the system used on Britain became the blueprint for the modern global debt trap. In 1939, when Germany invaded Poland, Britain was still the center of global finance. The pound sterling was the world's reserve currency. London was the financial capital of the planet. The British Empire controlled a quarter of the earth. Britain owned railways in Argentina, copper mines in Chile, factories in America, and investments across every continent. Those assets generated hundreds of millions in annual income that paid for Britain's imports. But Britain had a fatal weakness. It imported far more than it exported. As an island nation, Britain depended on foreign food, foreign oil, foreign raw materials. And when war began, Germany targeted that vulnerability. Submarines sank merchant ships. Ports were bombed. Supply lines were choked. To survive, Britain needed massive quantities of weapons, fuel, steel, and food. And only one country on Earth could supply them. The United States. There was just one problem. America was neutral. Under U.S. law, Britain could buy supplies only under cash and carry. No credit. No loans. Cash up front, transport it yourself. That condition quietly sealed Britain's fate. From 1939 to 1940, Britain paid America by liquidating its empire. First, the gold went. In a secret operation, Britain shipped billions in gold bars across the Atlantic, the largest transfer of physical wealth in history. Next, securities. British citizens were ordered to surrender American stocks and bonds. They were dumped on Wall Street to raise dollars. Then came the worst sacrifice. Income-producing assets. Factories, railways, companies. Sold at fire sale prices because everyone knew Britain was desperate. By late 1940, Britain was mathematically bankrupt. The gold was gone. The investments were gone. Yet billions in supplies were still needed. That's when Winston Churchill wrote directly to Franklin Roosevelt. The message was simple. Britain is broke. Roosevelt understood the stakes. If Britain fell, Germany would dominate Europe. But politically, he couldn't give Britain a gift. Americans opposed it. Congress opposed it. So Roosevelt created something that looked generous, but wasn't. Lend-Lease. Publicly, it was described as lending a garden hose to a neighbor whose house is on fire. But behind closed doors, the negotiations were ruthless. America's Treasury Secretary demanded that Britain strip itself of every remaining asset before receiving aid. Full audits. Full disclosure, Britain was treated not like an ally, but like a bankrupt corporation under creditor supervision. American officials forced Britain to sell profitable U.S. companies at deep discounts. Investment banks stepped in, buying assets they knew Britain had no power to refuse selling. At the same time, another deal was struck. Britain desperately needed naval escorts. America had 50 old destroyers sitting idle. In exchange, the United States demanded 99-year leases on British military bases stretching across the Atlantic and Caribbean. Britain handed over strategic control of the Western Hemisphere. Only after these concessions did Lend-Lease pass, and even then, the most damaging clause was hidden deep in the agreement. Britain agreed to dismantle imperial preference, the trade system that protected British industry across its empire. That clause guaranteed that after the war, British markets would be open to American competition. Britain signed because the alternative was starvation. When the war ended in 1945, the shock came immediately. Within days of Japan's surrender, the United States terminated Lend-Lease overnight. Food shipments turned around aid stopped. Instantly, Britain's economy, built entirely around wartime production, collapsed. With no dollars, no exports, and no reserves, Britain faced mass hunger. There was only one option left: borrow from America. The loan offered in 1946 was just enough to prevent collapse, and it came with devastating conditions. Chief among them, currency. Britain was forced to make the pound freely convertible into dollars. Economists warned this would trigger a run on the currency. They were ignored. The moment convertibility began, countries rushed to dump pounds for dollars. In weeks, nearly 20% of the loan vanished. Britain suspended convertibility in humiliation, weaker than ever. From that moment on, Britain's global role evaporated. It withdrew from Greece and Turkey. America took over. The pound was devalued. Living standards fell. The empire dissolved, yet the debt remained. For 60 years, Britain paid interest to the United States through booms, recessions, and political revolutions. Final payment, December 29, 2006. But the most important part of this story isn't Britain. It's what came next. While Britain was bankrupt, American officials designed the post-war financial system. The dollar became the world's reserve currency. The IMF and World Bank were placed in Washington. Loans would come with conditions: privatize assets, open markets, remove trade protections, make currencies convertible. This was the British experience, exported globally. Over the next decades, more than 80 countries would enter IMF programs and lose control over their economies, the same way Britain did. Different nations, same playbook. Britain didn't lose World War II. It paid for winning it. And the system that stripped the British Empire is still running today, quietly transferring wealth through debt, contracts, and crises. Understanding what happened to Britain isn't history. It's warning.